Hi, social equity applicants. Excuse me. This is Craig Levin back again this week to talk about more on the finance and accounting side for the businesses that we're hoping to be involved in, cannabis retail in the future. So this module is Module 2. It's called The Basics of Finance and Accounting. And I'm going to tell you about the things that you want to make sure that you take care of from the inception of the business so that, on a finance and accounting standpoint, so that later on you're not backtracking and you're not looking through bank statements and shoe boxes full of receipts in order to fill in a year or two of past financials. Okay, that's a nightmare situation, and it's expensive. It's expensive. It takes a lot of time. It's frustrating as all get out. Okay. So kind of the premise of this is that, hey, you start this from inception, from day one, tracking any inflows and outflows of cash through the business. Okay. So this module is going to tell you what you should be tracking, how you should, or what some good methods are to do that tracking. And what some good tools are, and gives you some specifics about what to do from day one and why you're doing it. Okay, so I'll go ahead and jump in. And the first thing in basics of finance and accounting for a retail operation is to set up your month-end close. Okay, so a month-end accounting close is that time that you reconcile everything at the end of the month and start to take a look at the results, the trends that you've run throughout the month. And these are trends in sales, discounting, payroll, all those types of things. And I should say that it's not just for looking at the end of the month. Really, you want everybody on the team to be aware of what the goals are and have some reporting of results throughout the month so that the income statement is not a surprise at the end of the month, right? We want to, if we're struggling in sales in the midpoint of the month, we want to be aware of that. So there's other metrics and reports that can be used that are a precursor to what the income statement is going to end up looking like. Okay, so the month-end close. First off, I want to mention that when you set up a system, an accounting system like QuickBooks, let's say, which is obviously very popular, when you set up QuickBooks, that's really where you're going to do all of your inputs, all of your reporting, and your month-end close and reconciliation. And so to enable you to do that, you need the basics, which the biggest one is a chart of accounts. And a chart of accounts in accounting is a list of your expense categories. And so what you might imagine is that you've got some cost of goods expense categories that that draw down your gross margin and determine, after your cost of goods sold, what is your gross margin. And in our industry, this is the amount that you get, that your tax burden is based on. Okay, your gross margin after cost of goods sold. So your first group of accounts are going to be types of cost of goods sold. It might be cost of goods sold flour, cost of goods sold vapes, cost of goods sold paraphernalia, however you want to break that down and look at it. At the very least, you want to have cost of goods sold cannabis products. Okay, and that can be an umbrella for everything, but ultimately your purchases of cannabis are going to that you're reselling are going to go into that expense category. The other accounts that you might imagine are below the line, is what we call it. The line is your gross margin. okay, after your cost of goods sold. And below that line, there's operational expenses. There's rents, utilities, advertising, wages, security, insurance, office supplies, yada, yada. Okay, so those are your accounts that make up your chart of accounts, and every invoice that comes in needs to be categorized to one of those accounts. Okay, that will enable you to close the end of the month and read your reports as to, hey, what did we spend our money on? Okay, the second thing about setting up your month-end close is that you need to have your bank account and your credit card account synced with your accounting software, so it can tell you, how much you have in the bank, and when you reconcile, it sees the bank transactions because it's syncing it up and receiving communication from the bank at least once a day. So you want to make sure that you sync up the bank accounts, your business bank accounts, all of them, with your QuickBooks or whatever accounting software you're using. The next thing for setting up month-end close is that somebody in the company needs to perform bank reconciliations, or I shouldn't say in the company, somebody outside, like a bookkeeper or an accounting firm, they can do it as well. But you want to make sure it's like, the accounting is like doing laundry. Okay, sure, you can leave it for a long time and then wash it all through months later, but it's always going to be there. It's never going to go away. And the more timely you do it, the easier your life is. Okay, so you want to perform bank reconciliations at the end of each month. That will make sure that everything that's represented in your reporting is true and is not going to be voided out in the future, so that your reports are no longer accurate in that case. So you want to perform bank reconciliations, close the month, and I always tell people, lock down the month so that after reporting has gone out to your partners or to your employees or whoever you're reporting to, you don't want that to change in the future. You want to lock it down, and accounting systems enable you to do that. So if you do have an adjustment from something that happened last month, you can do that in a future month. It'll just, if it's a negative, if it's a credit back, it might be a large negative number in one of your expenses, which looks weird, but you know why that's showing up. It's because of something that happened in the past. The last thing is, do any adjusting journal entries each month when you're closing the books. Okay, that might be refunds that you did or canceled orders, basically everything that happened in that month that you know about at the end of the month needs to be reflected in your financials. Okay, the second point of the basics of finance and accounting is setting up the accounts payable function. This is bill paying, and you'll have all types of bills. Many of them you will probably have on like an ACH or a bank, like online banking. So those ones it's great if you have certain expenses that are stable each month. It might be to your landlord for rent. It might be for insurance. It might be for your, external bookkeeper that I was mentioning. Those expenses, if they're the same every month, it's great to put them into online banking. Okay. The other ones you'll be writing checks for. And so you don't want everybody in the company writing checks, or everybody going into the bank account, into the banking software and setting up online banking payments. You want one person to be doing that. So you want to create an email address, something like admin@yourdomain.com, and have all of the incoming bills come into that email address, and any that come in physically through the mail, or sometimes, crazy enough, they come, they're delivered through the door. A vendor comes and drops off an invoice at the sales, at a point of sale at your store. So those all need to be collected into one place. All right. You can't have everybody writing checks off the same checkbook. You can't have bills not show up for the person who's paying the bills. So everything needs to go to the same person. Okay. Then there is approval workflow. In other words, these invoices should be approved by somebody before they're paid. So if you are a manager in a store and you order some supplies, or you order, let's say, some signage to be fixed, when that vendor for fixing the signage gives you the invoice, you need to be the one who's responsible for, the person who ordered the service is responsible for marking that invoice okay to pay, and then giving it to accounts payable. Okay. If you don't, what's the accounts payable person going to do? They're going to assume that an invoice has come in, it needs to be paid. Okay. So the communication in the approval needs to happen with the person who ordered the work and is basically punch listing it and saying it's done. It's okay to pay. Okay. The last thing on the accounts payable function that I want to mention is processing payments on a fixed schedule. I know a lot of folks do it every Friday. I think that's great. Okay, there's a few reasons for that. The main reason is it helps in the cash planning piece of your business. In other words, let's say that there's a case where somebody is paying bills as they come in. Okay. So if you just open the mail, see the bill, pay it, whatever day it is, there's a few bad things that could happen. Number one is higher priority bills. There's not enough cash to pay higher priority bills. And gosh, I wish I had, held all those bills until the Friday, because some of the bills that I paid weren't even due yet. And now I don't have enough money to pay the one that is due and is of utmost importance. So you don't want to just willy-nilly be, paying bills as they come in because that makes you feel good about not owing anybody anything. Well, unless you have unlimited funds, I would not suggest doing that. The other thing is, when you process payments on a fixed schedule, it's kind of like payroll. You know that you need to have a certain amount of money at the end of the week to make those payments. And so you'll sleep better knowing if you have enough money for that stuff, or if you don't, knowing it in advance and finding solutions before that Friday pay date that you've got. Okay, I mentioned payroll. The third thing is setting up the payroll function. So I always suggest that people use a payroll system like Gusto or Paylocity, and it's for a few reasons. Number one is payroll is a sacred thing that needs to be managed with the utmost care. And so a management system like payroll, like Paylocity or Gusto, helps you to manage that and helps employees to understand their payroll. Okay, as opposed to you just writing a check or handing out cash. I'll talk about that in a second. But you want to use those systems. The second reason that it's good to use a system is a liability issue, like using, if you have somebody do your payroll, let's say in Paylocity, it's a third party that ensures that you are, that compliance is number one. Nobody internally is paying themselves money through the payroll system that is not authorized. I've seen that happen, and a lot of people just do their own payroll. I understand that. There is the option to have an external third party do your payroll. So give careful thought to how you want to do that, either internally or have somebody external do it. I always say back up all payroll files in Excel. Okay, these systems like Paylocity have all of your historic reports, but those systems can be fickle sometimes, and I say just make sure that you back up all your payroll files. Lastly is my suggestion: don't pay in cash. Don't do payroll in cash. I was, involved in the industry firsthand back in the days when, credit unions like Salal and OB were not serving the cannabis industry yet, or not widely serving the industry, and so a lot of payroll was done in cash. And when I entered the industry, the company I worked for was doing that. And, there were some nightmares. There were, the main one was that, hey, everybody receives their envelope with cash in it on a Friday. And, some of them got lost. Somebody put it down on the counter, went to the bathroom, went to go pick up a carton of empty cartridges, whatever it was, came back and the envelope was gone. What do? Well, you feel for the person, but you don't repay, and pay the person again. Those things are resolved with direct deposit, checks, whatever it might be. Don't pay in cash. Okay. The fourth point in the basics of finance and accounting is financial planning and analysis. Now, I often tell people that the finance and accounting functions in a business are kind of like a pyramid. And at the bottom of the pyramid, because it's the foundation that holds up the structure of the rest of it, the bottom of the pyramid is accounting. And that includes all the processes that go into accounting. So you need to have some processes in place for how to account for things. And you need to have good accounting. Okay? Because garbage in, garbage out obviously applies to, your QuickBooks instance for your business. So, the bottom of that triangle is accounting, and if there's good accounting, what you can build on top of that in the middle of the triangle is financial planning and analysis. This is budgets, forecasts, investment analysis, scenario analysis, business planning, those types of things. And they all count on good accounting. So the foundation of accounting builds up the ability to do that strategic work. Okay, the financial planning and analysis. So if you don't have good accounting, don't expect to be able to do anything strategic. The only way that you will succeed is through luck. You're not using the data that you have available to you, okay, when you don't have good accounting. And then the pinnacle of that triangle is strategic CFO type work. And that right there, you might be a little bit involved in that because you've got financing partners, You've got other business partners that are on profit share or something. So strategic CFO work has to do a lot with, capitalizing your business, deciding on tax strategy, deciding on partnership deals, deciding on big investments like acquisitions, liquidations, those types of things. Okay, then that strategic function is built on very good financial planning and analysis, which is built on very good accounting. And that's why we say good accounting needs to start from day one. All right. With the financial planning and analysis function, you want to have you want to create a business model. And this is basically, a mathematical representation of how your business operates and makes money. So that, the best, or I guess the most basic description of a business model is like a pro forma income statement. Let's take that one for example. And your business model would be something that has a assumption of a percentage of month over month growth with some seasonality in it. So you can have your top line in this model kind of, imagine it moving up and to the right, but, showing some seasonality. There's seasonality in this business that I'm sure many of you have witnessed, and that needs to be reflected in the assumptions of revenue for your business. So it's a business model is something that models that out and would have an assumption where you could adjust the scenario by adjusting the assumption. Maybe we say that year over year, the assumption is that our revenue is going to grow 5%. So you have an assumption page in your business model workbook, and you enter in that 5%. And if you see that in actuality you're only increasing 4% year over year, you can go into your business plan and change the 5 to a 4, and that should flow all the way through your Excel workbook and your business model. That's basically applying the new data to your trends. Okay. And as well, let's say that you've been experiencing a 40% gross margin on everything that you sell. So you'll enter in 40% and you'll calculate approximately how much COGS you'll have each month. And then that will determine how much margin you've got to work with for paying your rent, paying your salaries, paying your insurance, etc. Then in your business model, you put in how many employees you plan to employ, and that will at what rates, and that will drive your wage expense. And ultimately, this is equating your bottom line for your business. And if a partner comes to look at how profitable you are, so that they might either invest in your company or a lender looks at your books, they'll want to look at future projections and look at a business plan. How does your business make money? And that is represented in your business plan. Okay. In these plans, you want to be realistic. Growth is not perfectly linear. There's pitfalls, there's seasonality, there's downturns in the market, there's changes in pricing, compression of margins. Those things need to be assumed in there. I've seen so many business models that basically, I've seen them for a lot of growers and processors. And those folks tend to, when they're green and wet behind the ears in the industry, they tend to think that we will process, we will harvest every plant will be perfectly healthy, will do the maximum yield We'll sell all of that harvest at the maximum price, and you can kind of see what's going wrong here. That's obviously not realistic. And if you put that in front of a sophisticated lender or potential partner, they're going to call BS, as you would expect. Okay. The last few bits, I think I've talked about a lot already. The point 5 and 6 of the basics of finance and accounting. They're analyze and reiterate your projections. Okay, so all these projections that we're talking about, cash flow, profitability, sales, whatnot, those things, when you put them into a spreadsheet, that's a snapshot in time. And when you leave it and never look at it again, it's really not worth anything. So these things need to be, your month-end reports and your projections need to be analyzed and reiterated. And the last point number 6, is reporting. And in the reporting, the simple reports that you can draw out of a system like QuickBooks, for example, is like the income statement, the balance sheet, the cash flow statement, and of course, there's all other types of reporting like your accounts payable reports, your accounts receivable reports. But the main thing that you'll be using is your income statement. Some other reporting and analysis that you can do outside of QuickBooks, but using some of that data, is some of your KPIs and metrics. Okay, you want to have some goals and some reporting that shows the achievement or trends towards these goals. Reporting, I like to have a lot of graphs in reporting, because people generally dislike huge spreadsheets with tiny little numbers and tiny little font in, just straight up black and white. It's boring. Who wants to look at that? And that's a reason that people get kind of agitated or, anxious about looking at big spreadsheets of numbers, and, they don't want to ask questions like, what's a budget variance and what's this and what's that? A lot of people choose not to do that. They're embarrassed to do that. So you want to make your reporting fit your audience. Okay. So that's it for basics of finance and accounting. We'll see you next week to talk about planning tools for small business finance and operations. Have a great week.